Wonderful good day, ladies and gentlemen, and good morning here out of our studios in Commodity TV in Munich, of course. And it's again, time for a new company, also new for us, Rathdowney Resources. And I think it's our first, special zinc company. And I'm very happy here that I have with me today first Dave Copeland, the chairman, and afterwards I will talk also to Robert Konski, who is president and CEO. Dave, let's start first with you.
Oh, good morning. It's very much an appreciation to be here and have an opportunity to speak.
Fantastic. Thank you very much for that. I'm also happy too. Rathdowney Resources. I just said it, you are in zinc, in the zinc space. You have the largest zinc property in Europe. Why zinc? How did you came on that? Is the zinc market that attractive?
Absolutely. This is the right commodity at the right time and in the right place. Poland has a long history of zinc production all the way back from 1200. There have been many mines there, but they've all been state-owned and operated. Since integration into the European Union, it has offered opportunities for foreign companies to become involved. And we took that opportunity as soon as the legislation let us do that. And we have acquired a very large land position, as you've noted, and we've been very successful in extending an existing mining district, and we're very pleased with that.
Okay, so you are, your main focus is Poland, of course, but you're also in Ireland and Alaska. Just shortly to notice, what is going on there? Is it a little bit more aside? Is it more on the waiting list, or how does it work?
That's a good description. It is more on the waiting list. They are both zinc-driven provinces, if you will, or districts, and so today, zinc is the right commodity at the right time. There are many zinc operations that are in the process of closing. Century, Lachine, very large operations. And if you talk to the metal commodities traders, there is definitely a deficit developing in zinc. You can see it today. You can see it in the price. Zinc has gone from 94, 95. It's now $1.05 and will continue to grow. We see it as a very strong opportunity for investors to take advantage of the growing zinc deficit in price.
That's some of the keywords I love, because when the underlying is in the deficit, it makes sure that you have for the next years a good market.
Absolutely. For next many years, we see a good market. The commodity analysts say probably all the way through to 2020. So,
wow, that's a long time.
It is.
Great. So let's come to your terrific Olza project in Poland. Give us a short overview about the project.
Okay, definitely it has gone from being an exploration project to a development project. Following Canadian investment standards and European EU standards, we have a defined resource for the project. We have 21 million metric tons in combined lead and zinc in 7.5–8%. Which is very strong economic number from an underground mining perspective. So we are now in the engineering development phase and in the permitting phase. Our president will talk about the permitting and agency in a few minutes. But from a technical perspective, we have a defined resource. It lets us now enter the engineering and development phase with the project.
When you talk about 7.4% zinc equivalent, I think it is. What else do you have in? Is it zinc and lead, for example, zinc, lead, silver?
It is very much correct, Jochen. It is both lead and silver. So if I break the two commodities down, the zinc is about 4.5–5%. Lead is 1.5 type percent. And then there's as much as 170, 175 grams of silver. So value in the rock itself per ton of rock is very strong. We look at the numbers of what it's costing in mining today in Poland, and we see we have a very strong margin.
Great. Let's come shortly to the metallurgy, because I think you did already some tests, because metallurgy is key if you want to produce economically, right?
You're absolutely correct. And we're very fortunate that we can produce a zinc concentrate and a lead silver concentrate. And that's through, as you say, extensive what we call bench testing work to date. So taking many core samples, making a small bulk, and then looking at the metallurgical results from that. And we see we recover 90% of the zinc, and from that we make what's called a concentrate grade. And this grade is anywhere we can make from 54 to 60% is where the concentrate smelter purchasers want it to be. And incidentally, very low iron, which gives us price
clean concentrate.
Yeah, clean, and it gives us price points in the smelter industries. So it's a sought after concentrate. And the same thing on the lead. We get about 92% lead recovery, and we get a very strong lead concentrate where the silver runs as well. So we're very pleased with those kinds of results. It means we'll have a strong concentrate return price versus our operating costs.
What would be your next steps into the exploration, or let's call it in the development?
Well, it's a development is really what we're doing. So we're involved in the engineering infrastructure review, and being in Poland, you know, we're not in the middle of ice or in the middle of forests with no infrastructure. It is an excellent place for a project development. There's already existing mining skills. There are producing mines there. So there are people with the talents. We have electricity, we have water, all the things we need that we don't have to bring for hundreds of kilometers. We don't have to build towns. There's a mining culture within the area, so it makes permitting, understanding that much more beneficial for us.
If you would have to do a very rough estimate, because I know we have forward-looking statements and disclosures, etc., very rough estimate. If you think about what you know so far, what could be an estimated mine life, and what do you think it may cost? Do we talk about 500 million, or do we talk about 2 billions or less? Can you just a rough estimate?
Billions. We do
good.
not do projects with billions. Those projects are out of favor for a whole number of reasons. I do joke, but it's true. This is a mid-sized project, so it is very manageable. And it's something typically the Hunter Dickinson sponsored group are very familiar with. They've done many of these projects on time, on budget, and have made substantial returns to the shareholders through that. So this is our niche type of project in scale and scope and cost. So with the 21 million odd tons, that gives us enough to develop the project, have a good 10-year, 12-year life. We know from previous work that this resource can be expanded probably into the 45, 50 million tons. But that is yet to come.
Of course.
We do not have that yet, but we certainly have indications of that. In terms of capital, this is probably someplace in the order of, I will use dollars, probably 250 to 350 million.
It's manageable.
Development. Yes. And so that would result in a project that would process between 4,000 and 6,000 tons of ore a day. So it's
not too large.
It's not too large, but it's substantial. It's a good mid-tier size project.
Perfect. Dave, thank you very much. And I will talk to Robert about the next steps in the development.
All right. Appreciate it.
Great. Thank you.
All right. Good morning now.